Let me just give a little background on what TPO charts are for those who don't know. Because the one thing when I first started looking at these, I'm looking at letters, not numbers. And it was kind of like, why am I looking at alphabet when we're talking about trading prices and things like that? And where that came from, just a little history, is from the trading floor. The trading floor, when the traders would be in the pit and they had a trading card, there was each half hour was called a bracket, and they would write down, when they did trades, they would have to write down the letter that the bracket that the trade occurred in. What bracket was it? And so each letter was very specific to a half hour time frame, and that's how the letters kind of became I guess the building blocks for the TPO charts. And I want to, in terms of definitions, TPO charts are the same as market profile charts when it comes to just, you might hear the term, both those terms thrown around among traders, market profile or TPO charts. Other platforms may even call them other names, but TPO charts are kind of the standard. And TPO stands for time price opportunity. That's kind of what I know it as, time price opportunity. And each letter would be a TPO, each letter that you see. The way these are built is as a price trades, it prints a TPO. So I have a candlestick up over here, 30-minute bar, and I'm doing that so you can kind of see, I want you to be able to reference something you probably know against, maybe this is a new concept for everybody. But basically, let me split this. What I've done is, if you can, hopefully you can see this, each bracket, so I start with bracket A, that's my first bracket. This is the S&P E-mini today. Each bracket is the half hour that it represents. So A would be 9:30 to 10 o'clock Eastern, which is the same as this candlestick bar. The next bar, this one, is this second bar on a candlestick. And what it does is, it's essentially, think of each bar or each bracket as a candle, if you want to think of it that way. And what it does, the beauty of what TPO charts does, is as the market rotates around, moves up and down, what it does, I'm going to collapse this, it builds a distribution. And you can obviously see that, right? And so that is one of the key things that traders utilize and benefit from by looking at a TPO chart. It helps you look at how a market is backing and filling, trading up and down, and where it tends to revert to. And so it provides a unique view of the market, whereas a candlestick chart, and I use candlestick charts personally, I do look at those. It's not that they're not useful, but they're broken out in time, each half hour or whatever time frame you look at. So you can see what it looks like here, just 30-minute bars. But if you were to compress these, just stack them all up so that as price traded into the future, as it, say, trades below the prior bar, it would stack itself up. That's what you end up having on the TPO chart. So kind of backing up here, TPO charts, I don't know if you've ever heard the term auction market theory. Really, TPO charts are it really represents the auction. And when you hear auction market theory, a lot of times you should probably think of TPO charts, because the whole idea is that it's helping you understand the auction and see how price is running up and down and backing and filling and creating a profile. And each profile will look different. They're not necessarily the same each day, but you do tend, oftentimes you do see it kind of develop a fat or wider part of the profile, and that simply represents the area that it spent more time in. Another term, just to throw out another term, is market-generated information. And really everything you see on a chart is market-generated information, but market-generated information goes hand in hand with auction market theory. And what we're trying to do when we look at a TPO profile is understand the auction that's taking place. And there's strategies then that you can employ around that, around this graphic. All it is a chart graphic. It's not a system. It's not a trading system. And it can be put to use in many different ways. One quote that I really like when it comes to kind of describing a profile is, price advertises, time regulates, and volume confirms or rejects all opportunities. I think Jim Dalton was the one that maybe coined that, and he's somebody who does a lot of education around market profile. And there's some good books by him as well that you probably are familiar with. But so price advertises, time regulates, and volume confirms or rejects opportunities. So as you can see, what I have next to the TPO profile is a volume profile. And that's something you may or may not be familiar with. On my charts here, I obviously have it set side by side. And I do that for contrast so we can see volume, but then we can also see the TPO profile. But you can turn that off if you don't want to see it. You just simply want to focus on the time profile. So, little terminology. The TPO profile, the one with letters here, that is time-based, whereas this profile is the volume profile. So this is built on volume, how much volume is trading at each price, whereas the TPO profile represents time. How did time build throughout the day at each price? So just to kind of say it again, each bracket, each letter represents a half hour period of time. So let me split this again so you can see it. So you can see each of these is a half hour. So see K period right here. This was just today. It topped out in J, and then it kind of came down and sold off. Well, K, this represents all the trading that occurred from this price here at the high, 36.77, down to 36.67.75. Traded all those prices during that half-hour period. So you can see when I split this apart, you can get a better feel for what it looks like more in a traditional manner. But when then I unsplit it, which I simply left click on a letter, and it brings up this menu. Left click on a letter, it'll bring up this menu. I'm going to remove splits and merges, and it stacks them all up so that we can see where it's spent less time and then where it has spent more time. These thicker prices, these areas where it's thicker, is where it has spent more time during the day. And so it can be real interesting to see, okay, well, I know this is where it spent more time. What about volume? Did it spend a lot of volume there? And let's just look at this, this section right in here. Yes, it did, but actually the higher volume prints below it, and there's some above it up in here. Just little things I want to point out. Okay, so let's talk about a couple components that go into this chart. And one of them is considered, or called, I should say, the value area. And the value area can be, it's basically represents 70% of the day's trading, one standard deviation of the trading, and it gets set based on where the highest, they call it the POC, point of control. That's another term, point of control. And it would be, it's right here on the chart. And that's where it's considered to have spent the most time. Now, you'll not to confuse POC with VPOC, VPOC. That's volume point of control. The volume point of control is where the most volume occurred. And oftentimes they will line up, excuse me, they will line up on the chart, but they don't have to. So I just want to point that out. And let's see, I'm going to click the gear and then click here. And I'll spend more time on this if we have time later in this session. Volume profile, I'm going to change that to be like yellow. Hopefully I can see it. It's right here. So the highest volume price, which is the VPOC, is up here, and the time POC or POC is down here. So you're going to find in the world of profiles, both TPO profile and volume profile, there's some guys that are going to say, "Oh, this one's more important," and others are going to say this is more important. I am not taking sides. I really don't care. I'll put them both on the chart, and what I want to see is I'm always looking for nuances on the chart, things where that aren't quite normal and I want to pay attention to. For instance, and this is definitely a little more advanced, but for a good example of that would be if the VPOC, the volume point of control, was right up here near the highs, and say we closed down near the lows. Well, that would tell me there's a lot of stuck longs. There's a lot of volume that traded near the high, and there's a good chance those guys are stuck long because price would be significantly lower. Now I'll get into more of that next time, but that's one way you can utilize this type of information. Okay. So the value area, it like I said, it represents 70% of the trade. So one way, and this gets into a little strategy, one way guys will use this, or traders will use this, is to sell around the high of the value area and buy at the low of the value area. Now, personally, I don't use it that way. I don't trade it that way, but conventionally, that can be a conventional way of utilizing the graphic and some of the data that gets generated from it. All right. And so again, the value area is this pink shaded area that I have on the chart. Another thing that's kind of a component to a TPO profile is the initial balance. And the initial balance is the first 60 minutes of trade, the first hour, or the first two brackets. So A and B bracket on my charts. And you can tell on my charts here that I'm showing, I actually color code A and B to be a different color, which you can do within the software. You can actually color code the letters to be all whatever colors you want them to be. But for me personally, the initial balance A and B that's like the key. Those are key reference points for me as a trader. And so I color code them so that they kind of stand out. And then when the profile, which I'll go ahead and collapse it here, I can look at the profile and I can see, actually today, you can see this tail down here. It opened here, traded down, and then came back up. And then within the second half hour, it traded all the way up to here. But I can see, and you can see, really that first hour encompassed just about the entire day's range, except we spent a little time above it, but obviously a vast majority of the trade was within that initial balance. And so that's a key observation. Those are the things you kind of walk away, not walk away, but as the day builds, you are noting that, and it can help build a narrative as to which way you maybe want to be positioning yourself. One of the big benefits, and you'll often hear this thrown around when people discuss TPO charts, is that it provides context, a market context. It provides just a different view of the market. Now I'm only looking at just today's action. We'll look at it. Well, actually, if you look over here to NASDAQ, you can see multiple days of price action. But you get a whole different understanding of the market, and I'd like to throw in auction market when you look at profiles, TPO profiles versus a candlestick. This is a really unique way to view the market and interpret it and remove yourself or take a step back from the noise of the market. Because I know oftentimes traders get sucked into the price action and you just don't know what's up and what's down. It's just, you get pulled into all the price action, whether you're over trading or whether you just don't have a feel for the market. These charts, I really do believe, I know for me personally, help give me that understanding. But it does take, it obviously takes work to try and make sense of it. What I want to look at is today's price action here in the S&P E-mini. Here's yesterday's down here. And I want to just show you some things that are worthwhile noting as you analyze these charts, because obviously you can use them for intraday trading as you're trading throughout the day. But part of trading intraday is having the bigger picture. You should have a bigger picture view of what's the market trying to do, and is it doing a good job of it? Those are two questions you should be kind of in front of you as the day is occurring. And today we came in, we knew yesterday was down here and we were gapping open, and we were looking to, well, the idea was, can it hold this gap or not? And it clearly did. But now that the day is over, one of the things I note this every day is, where was value? What happened today? Well, one thing, we did gap higher. And the other thing I want to see is value, which value is higher. It's not even overlapping. Looking back over here to yesterday, you can see this shaded area value. You can see today was significantly higher. A lot of times, if I scroll back, a lot of times value is overlapping. You can see it's overlapping here. Here it was higher. And then the next day it fell back. So one important observation, especially as the day is progressing, is value higher or lower, or is it overlapping? And the value area changes throughout the day as time builds, as price trades, as volume is occurring. This will change, but as the day moves on, it really does get set. It doesn't move a whole bunch. But I just want to bring that to your attention. So value, where is value? Both from a day level for the current day, but also how's it compared to prior days? When value's higher, it favors the long side, and when it's lower, it favors the short side. So right there, I'm just trying to provide you a couple rules of thumb. These aren't guaranteed rules or no crystal ball or anything like that. But it can provide you, like a day like this. Well, actually, no, let's talk about today. We can see when the market opened, it gapped higher, and immediately it was trading. The market's, trying to find balance, and it's auctioning around. But as the day matures and you're seeing value hold, it's clearly much higher than yesterday. Well, that can help set the tone for, are you looking for longs or are you looking for shorts? And I'm using, that's, for me, it's a piece of my analysis. It's not the only thing that would say, yeah, I'm going to work buys or I'm going to work sells. But it's something that you're trying to use this is a tool. You're trying to use it to help position you on the right side of the market so that you're not constantly fighting the market and getting run over. Initial balance, I mentioned it, but how does it get used? It's one thing to know what it is. It's another thing to know how it gets used or employed by traders. And you can see A wide initial balance, think of it like a foundation, or think of like you're building a pillar, okay? If you've got a wide foundation, the likelihood of it tipping over is reduced, meaning if you got a wide base, it's harder to knock it over to the left or to the right, if that makes sense. Well, if you think of a wide initial balance, something like a fairly large ranging initial balance, which is again is the first hour, the likelihood, think of that as your base or your foundation, the likelihood that the market can topple, meaning run real high to the upside or run real low to the downside, is reduced because that serves as a foundation. And I'm not saying this happens all the time, but what you see a lot of times is a market do a lot of rotation back and forth, maybe probing those levels, which it did today. It probed above the initial balance before falling back in and, and building what looks to be pretty normal profile, normally distributed profile outside of this buying tail at the lows. Institutions tend to do a lot of their business in that first hour and a half, and then that last hour. And so you can utilize this as some insight as to what they're doing or how involved they were. Oh, another nice thing, I just want to make note of this with these TPO charts is the ability to trade from the charts. So if I wanted to work an order, let's say that you could see the market's down here at 59. If I wanted to work a buy order, let's just say here at 55, just click down here and I can put a buy limit in there. You can get it where your trades can line right up with the levels that you're looking at. Maybe the value area high, value area low, things like that. Another thing that this kind of is more from the trading idea standpoint, but this is one of the reasons I like them, is it shows, I refer to it as excess, and it's not a term unique to me, but you can see down here on this open today was it's a big open. We were opening out of balance above, meaning we were opening up above recent balance or area where the market had been trading. We're gapping higher, and it's the first of a new month, so it starts a new monthly bar. And so this open had a lot of potential to go one way or the other. Anytime a market gaps, it's out of balance. That's the way you need to think. And it has potential to go up fairly significantly, or down, or sometimes it does open and just churn, but it holds the gains. So it's still positive even if it churns. But today was interesting because we tested lower and it rejected, and it never came back. So this is considered a buy tail, and it's a form of some excess here. And so that's one of the reasons I like these charts, because it makes it very clear, and you can use this level, right here, is a level where if it gets below that, it's eating into those single prints. Hopefully I've described what a TPO chart is. Essentially, it is a graphic. It's hard to call it a chart. It is a chart, but you're so used to thinking of charts based on time or bars that build. So this isn't so much bars that are building, it's a graphic that's building based off 30-minute brackets, and it builds a distribution over time, showing you where the market is doing more. I don't want to say more volume. This is the volume profile, but it shows where the market's most comfortable, and that's represented in time. Where does it tend to constantly be backing and filling? Areas where you have fewer TPOs, like this would be considered one wide up here at the top. These next few where it says JK, that's 2 wide. These next several here would be 3 wide. And so you go down to here to where our POC was, and we got 1, 2, 3, 4, 5, 6, 7, 8. Looks like 9 wide. And so that's another metric some people will look at. The wider it is, the more where clearly we would be seeing more rotations, and the market is more settled at those prices and more likely just to stay around those prices as the day wears on versus breaking from them, because there's so much committed at that level.